Truth with your host, Dave Kranzler from InvestmentResearchDynamics.com and Rory Hall from thedailycoin.org. And we are going to cover the silver market today. Today is Monday, May the 4th, 2015. Dave, apparently you've got something on your mind with this spike in the silver market that happened at the beginning of the day. And what do you make of that?
Well, I've been watching silver now I've been trading and watching it for 14 years, and I've noticed just in the last couple of weeks it's behaving a little bit differently after it gets one of those manipulated waterfall smashes than it has been at any time over the last 4 years since they started squashing silver when it tried to make a run over 50 back in April 2011. So, and there's a lot of signs that indicate that things may be turning. You know, today, for instance, you can see from that first graph I sent you that silver was actually fairly well bid for overnight. It opened up on the access market last night, green, which is unusual for a Sunday night because it's so quiet, and they usually almost 95% of the time when the access market opens for gold and silver, which is 6 p.m. East Coast time, they just there's automatic sell programs that kick in. It's unbelievable.
It is unbelievable.
There's a guy named James Mack who tracks it, and the last time I saw it was something like 150 out of the last 154 nights. That was the case. But at any rate, it seems to me that over the last 2 weeks or 3 weeks, every time they engineer a waterfall smash in silver below 16, it doesn't take that long to spike back up. And the time in between the waterfall smash and the spike back over 16 seems to be decreasing. So I sent you that chart of the COMEX open this morning.
Yep.
And as soon as the COMEX opened, silver spiked up like 50 cents. And that's extremely unusual for that to happen at the COMEX Open because they almost, just like at the Access Open, they almost always automatically smash gold and silver when the COMEX opens, especially when there's any kind of economic news, good or bad, as we saw last week. And then on the second chart I sent you, you can see that I've just sort of highlighted over the last couple of weeks how much time it's taken every time there's a waterfall decline. I've highlighted where the declines happen with the yellow boxes, and how long it's taken for silver to spike back above 16. And what's interesting is that the spike back over 16 is almost a mirror of the spike down. So, and again, there's no way to know exactly what's going on, but I think what's happening is they're trying to engineer a smash below 16 to scare long positions out, and as soon as the downside momentum stops, as soon as the waterfall stops, the longs say, no, we don't believe this. We think this is paper. We're going to buy this. And then it spikes right back up. And that's a combination of short covering plus hedge fund computer programs chasing the upside momentum. And that's why you get these big up and down spikes. Whoever gets it started, I think it's the Fed via one of the bullion banks. What happens is the momentum starts in one direction, and then the hedge fund computers kick in and pile on, and it tends to exaggerate the trading effect. But in my opinion, it looks like the upside momentum has a bigger bid than the downside sell-offs have offers or sells.
And I'm looking at this chart where you've got all the days laid out. You know, there's 12 days below $16, 14 hours below $16, and I'm looking at specifically the 12 days below, because if you look at that, it's almost 12 days above. It's just about exactly 12 days above, maybe 14.
It's longer than 12 days. It looks more like 20 days.
Okay. But
that's a good observation. I didn't even think about that. You're right. So you had 12 days below, call it 20 days above. They take it below 16 again, and now other than that 5-day period,
it's hours.
It's hours, right?
That's pretty big, I think. Anyway, I mean, it's
I agree. So from a long-term chart perspective, what I've done is I've prepared the graph that shows the last 4 years on a daily basis in silver. And again, this is the COMEX silver futures contracts. Basically, you could do the same thing with the Kidco charts, but I can customize these charts. So this basically takes us back to the top of the market in April 2011 and takes us all the way down to the bottom. Now, on the lower right, you can see I've kind of marked a green line, and it looks like there may be an uptrend starting. And again, we had a false start in 2013 in terms of whether or not there was going to be an uptrend. I didn't mark it, but you can kind of see it to the left of where the green line is. However, the third sort of bottom went below the middle bottom there, and so technically that would be considered an invalid bottom because the third low was a low that was below the middle low there. But then if you go to the far right where I have the green line, it almost looks like it's a little bit of a takeoff ramp there where you have higher lows with each successive sell-off. And again, the jury's out on that. I'm just pointing out what the chart is showing. It could be insignificant. On the other hand, it could be extremely significant.
Now, what about that? I'm looking at that long-term chart back at Q4 through Q1 14, and you've got a triple bottom there also, and then all of a sudden in Q1 14 it shoots up, but then they're able obviously to take it down to where it's at because it went from roughly 1875, 1880, all the way up to almost, well, call it 22, and now it's down where it is currently, which is mid 1650 or whatever.
Yes. Now that's a good point, but again, that third little bottom there back in 2014 was a lower bottom than the middle bottom, and that technically is a breach of the triple bottom formation. And again, I'm not a big technician. I'm just telling you what I'm seeing from a very rudimentary fundamental standpoint. But this triple bottom that we've got that I've marked with the green line is technically a different character nature from a technical standpoint because you've got three higher lows there, and now this chart doesn't show today's spike, but we're above the high there on that third bottom when we got up a little bit over 1627. Now, again, since I'm not specifically a technical guy, I just want to talk about the fundamentals really quickly here, and that is when we interviewed James Turk, he was talking about gold being in backwardation in London. And last week he did an interview in which he said both gold and silver are in backwardation in London. Now, what that means is that physical supply is tight and it means that people would rather hold physical supply that they buy now and get it delivered now than buy a futures or a forward contract and wait 30 days and get it delivered at a cheaper price. It means they don't necessarily trust that the physical is going to be there in 30 days to be delivered. They want it now, and people are willing to pay a premium for that. Otherwise, an arbitrageur could short sell physical silver to someone right now and hold off delivery for 30 days and take delivery in 30 days at a cheaper price, which he locked in by buying the forward price today, and capture the arbitrage profit. And since that's not occurring right now, it tells you that people, smart money, people who see what's going on a lot better than we do, people who have a better view than we do, are seeing that physical supply is very tight. And so that's another reason why I think there's potentially some meat behind this recent action in silver. And I'm not the only one who's been noticing it. A lot of people have been noticing the same thing that we're talking about right now.
Yeah, John Embry made note of it in that last interview we just did with him.
Yes, in fact, ironically, that was one of the days where they took silver below 16 on that bogus jobless claims report. And during our interview with him, when we were recording it, silver popped back over 16 right towards the end.
Yep.
And one more thing I just wanted to mention really quickly, and there was a lot of buzz last week about that article that Goldcorp put out about is JP Morgan cornering the silver market. And I have my doubts about whether or not it's JP Morgan. It's actually JP Morgan. The first reason is because if JP Morgan is accumulating a large stockpile of physical silver, they would not be doing it on the COMEX where data gets reported and it's a visible market and everyone would see what they're doing. I've long suspected that the big bullion banks are indeed stockpiling physical gold and silver, but I think they're doing it and they're keeping it in the vaults over in Singapore and Hong Kong, those brand new vaults that have gone up in the last couple of years, because I think they want to do it in a very hidden manner, like everything else is done behind the scenes in the bullion world. They try to hide it. So I don't see any reason why JP Morgan would accumulate a lot of physical silver in a very publicly visible fashion. The second thing is that article references a graph that shows JP Morgan's vault inventory, COMEX vault inventory, and it shows the registered and the eligible. The registered silver is the silver that investors have made available to be delivered on the COMEX. And it has to pass through, you have to jump over some hurdles in order to register your silver. The eligible part of that graph, which is the bigger portion of it, is the silver that is being safe kept by investors or by JP Morgan in their house account on the COMEX. Now, the problem with that graph is you would have to go back and track the daily deliveries, and you might even be able to pull it up on a monthly basis on the COMEX, and I have not done that. But you would have to track it on the delivery reports. It designates whether JP Morgan is taking delivery in its house account, which would be its own account, or its customer account, which is designated by a C. And that's the only way that we would know whether it's JP Morgan, the bank, that's taking delivery on a proprietary basis, or whether it's JP Morgan's customers who have gone long COMEX silver futures and have taken delivery on the COMEX in their own account. Now, it just so happens that 24 Hour Gold published an article today, and it's by a guy named Bron Suchecki, who works for the Perth Mint, and he's actually went and done that math. And he said if you go and look at the accounts, the account breakdown of where the deliveries have been made, 4,781 net contracts have been delivered into JP Morgan's customer accounts, and JP Morgan's house account has delivered 4,683 contracts. So that would suggest that it's JP Morgan's customers who are accumulating that silver and keeping it in their vault, which I would not personally do. I would take delivery, but I wouldn't keep it in their vault. And it suggests that JP Morgan is the one who is shorted into these guys. So we got to be careful with articles like that. Again, Goldcorp could well be right about it. Based on this article that Suchecki published, it would suggest that it's not JP Morgan that's accumulating silver on the COMEX, and it also reinforces my conviction that JP Morgan would not accumulate silver on the COMEX. Rather, they do it out of the public's eye and do it discreetly and keep it over in the Asian vaults.
It wouldn't make sense for them, as John Embry pointed out, it wouldn't make sense for JP Morgan to be purchasing physical silver in light of the fact that they have the biggest short position on the COMEX. Those run contrary to one another.
Yes, that's correct. So anyway, that's all I have on this topic. I don't know if you have anything else to add. I will just say that earlier this year, I published an article on my blog, Investment Research Dynamics, in which I predicted that silver would be the best investment class for 2015. I still stand by that conviction that silver is going to be the best place to have your money in 2015.
Now, is that for trading? Is that for physical? Or is that for
buy
both?
It today, buy it on the next dip, buy it on every dip, and hold it and through the end of the year, or actually measure it from January 1st through the end of the year, silver will be the best performing asset. So for a 1-year holding period. but you can start accumulating it now. And I'm talking about physical silver. Unless you just want to trade it and index it, then you can use SLV.
Well, I believe in physical myself. And I think that anybody that is listening to this, if you're not accumulating right now, then shame on you. So go get you some.
All right, that's all I've got, Rory.
Well, same here. So thank you for tuning in. And Dave will pick it up in a day or so and take it from there.
That sounds great.
All right, buddy. Have a good one.
Bye.
Bye-bye.